Yeah. Talking about the scores we ain't set. We said winner 1, 2, 3, 4, 5, F. Fam over gram, that's a message. We be stacking bread up like it's cheddar. Talking about the scores we ain't set. We said winner 1, 2, 3, 4, 5, F. Dreams over schemes, that's a
All right, baby. Dreams over schemes. That's the mission. All right, let's jump in. First off, I got a question. I just noticed something.
Yes.
Is that a pull-up bar in the doorway?
I mean, come on. It wouldn't be the gorilla jungle.
We were just prepping, and I all of a sudden I looked and I was like, hey, is that a pull-up bar? And I've reached an age where I probably need that, but for a different reason. It's for spinal decompression at this point. After that's, you knew exactly what I was going to say.
Oh yeah.
Oh, all right. Friday morning, pre-Memorial Day weekend. We're going to make this one hard, fast, quick. I think both of our Fridays got really slammed all of a sudden, which is good.
Yeah.
So I put out a LinkedIn post this week that generated a really healthy back and forth, and actually several other LinkedIn posts that were triggered off of this LinkedIn post. And whether or not Model Match or Eric or whatever got credit was not the point, and I don't care. I knew it though, because people messaged me and said, hey, check out the post I'm about to drop. And then it was very similar. So here was the post. Model Match recently has released a bunch of market reports inside of the platform, and it's really just step one. We're geeking out on it. We're gonna build upon it, and one of those reports is called an industry movement report, which speaks for itself. Show me what kind of movement is happening nationwide, geographic, specific. You can break it down by company. Show me only banks, only credit unions, only IMBs. Producers only, which by the way gets left out a lot because there's NMLS IDs that are making changes that don't produce, whether they're a junior LO or an LO assistant or for whatever reason, and it skews the numbers. So you can eliminate those and only look at the producers. But there's an interesting portion of that report, and it's called cohort view. And what cohort view is, it breaks the producers down into cohorts. So you have a low tier, a mid tier, and a high tier based upon volume and unit count or unit count. And what we found was on the low tier, those that do between 1 and 24 units annually, that when they make a move, that in the next 14 months, their volume and units increase by a relatively significant percent, call it 50+%. Okay. Mid-tier, so those that do between 25 and 99 units, after they make the transition, their units and volume fluctuate. There's a little bit of a drop, call it -5%. So let's just call it flat, because the truth is, let's give some credit to the first 90 days when you make a change, and maybe it takes a little bit of time to ramp. So let's call that one flat. Top tier though, which is 100 units plus. And by the way, we're going to change these. I think there should be more than just 3 tiers, honestly. But for the moment, 100 units plus. When they make a move, the volume and the units drop off relatively significantly.
Yeah.
So number one, there's a lot that we can talk about in there, and maybe this is multiple conversations. For this conversation, what I'd like to talk about, because this is where the comments went in this post, was how transition comp is managed in those scenarios. Do companies have the visibility into the data that removes the emotion when they're creating a pro forma that then relates to sign-on bonuses, transition compensation, things of that nature? Are they looking at the real data and understanding the go forward? What's the future tell me? Which now Model Match is showing what the future results look like. And how do I manage that into the offer, the transition compensation? Then I start thinking about motivation. Motivation from the company. Why would you overpay when you can see that clearly that there's a fall off? And also the next thing we can start to track is how many people change jobs after 24 months, meaning you had a 24-month clawback, you got the money, and then you made a change. Whole other report that will roll out. Does the company even care? What's the motivation when you're, quote, overpaying? And then also from the originator perspective, what's the motivation when you're making a change? Are you really moving towards something that's a long-term solution, or is there this thing inside of the offer that creates the short-term solution to a problem that might also be short-term? Okay, so Abdel, I come back to you now, and I'd love your perspective from 2 sides. Number one, someone who's building a division that's doing the recruiting, that understands transition compensation is important. So how do you take these numbers and how do you partner with the person that you want to bring on to show him or her where there's equity? It's an equitable offer in both directions. But then I'd love for you to talk about it from the other perspective, which is put yourself in the position of the originator. It's been a tough market, man. There's been headwinds for a while, and you've got this transition comp that is part of your full doc process of actually making a change. So, okay, I just vomited a whole bunch on you, man. So take it in whatever direction you want.
I think I'll start out first from the originator's perspective, and then I think it's easier for me to tie it into where my mindset is at. Right. I think the problem is that the biggest part that we've seen is just there's that motivation distortion between, are you looking to get paid based on past production? Well, where are you also in that phase of your career too, right? And how do you find that balance of it being equivalent to market conditions are a big factor too, right? So if you're a heavy refi driven loan officer, right, I'm not hiring you, right? Because we are not a heavy refi driven institution, right? I also think it's where are you at in your production? Is your production up 20%? There's a reason why you moved. So maybe it was better pricing. Maybe you're looking for better operations. Maybe there's a product gap in place. Maybe non-QM, you guys broker it instead of doing it in-house. Down to, I think then there's usually the stick between the two. You're either floating where you're going anywhere from up 10% or down 10%. And then you categorize it into you're just a dud or you're getting washed up or you're just not changing your business model, right? You become a product of that old environment. That's just not necessarily the case. So from my side, from a hiring side, I do not offer sign-on bonuses. I think it creates, again, that comfort level. It's the golden handcuffs, whatever you want to call it, right? When you wrote that check, that loan officer emotionally, and he basically, invested into that paycheck rather than the relationship. And I have that, question in place where I look to rationalize with the loan officer. Well, let me ask you a question. Why are you looking to leave? How is your business coming to you? And what other different products that you currently have in place that we can have conversations with? You're very, very familiar with my entire ecosystem that your team is as well. And when we gave them a bunch of shit, they're like, holy crap. And it's ridiculously structured and it's geared to many different facets of a business, right? So we go through that full vetting process, right? And I always break it down literally into an acronym. And when we're talking to a loan officer, it's show me proof that you are what you say you are. So the P is for pipeline. The R is for your referral sources. Are you a lead gen heavy driven loan officer or are you a referral source driven loan officer? If you're a lead gen driven loan officer, are you bringing in your own lead flow or are you relying on the company to give you the lead flow?
Is it transferable? Like who owns that lead?
Totally. If it's a referral partner, great. How did you meet that referral partner? Was it through the branch manager? Was it through the company and so on and so forth? And if you leave, is that branch manager going to go and try to undercut you? Just like what we had, one of our first episodes was who owns the borrower. Mm-hmm. Same way, in my opinion, who owns that referral source. O is origination history, and not just in the last 6 months, 12 months, 24 months, but also to your point, which I'm so excited for them to show what is the projected next time frame in the future of where your business could potentially land, right? The other one, I'm a big ops guy, so operation dependency, right? So how involved are you with operations? And if you tell me you want nothing to do with operations, depending on, just what's your close rate, right? Do you know your churn rate on your refis? Do you know your basically timeline that it took for you to close your transactions in the last 6 months or 12 months? If you don't, okay, but can you get that data from me within 24 hours? If you can't, that's a problem, right? Because that also means that you're completely hands off, which is okay. But do you have that full trust in your operations team where you also can be completely hand off, right? Or are you only concerned with that file closing and we run into that roller coaster loan officer, right? And then the last one for proof would be fundings, right? Obviously, at the end of the day, I think a lot of times people usually do it in the reverse, where it's like, well, you got a lot of fundings. Well, maybe you just landed that one big builder account and that builder now had built all those properties and now they have nothing else in project to build for the next 2 years. And I just stroke a check for you for $200,000 or whatever the math is. And now I'm stuck. And now it's going to impact your pricing or it's going to impact the bottom, revenue for the branch, for the region. and kind of take it from there. So that is, I would say, from both sides of it. And I think it's transferable to both ends of it.
So hold the thought for a second, because that's great. What you basically said was, first off, full vet. Before we even get to that point where we're talking about these numbers, full vet. The other thing that happens within that vetting process is trust should be built both ways. You're not just vetting, they're vetting as well. So we should be reaching a point where we both agree, you solve a problem for me, whatever that problem is. That solution allows me to do more business in the same amount of time, or the same amount of business in less time. But let me ask a question. In the midst of all that you threw in, I don't do sign-on bonuses, which is fine. That's you. Other people do sign-on bonuses, and I think you and I could both argue. Look, it's an investment. As from a company perspective, I'm making an investment. I expect a return on that investment, and as long as I go through the proper vetting process using data that's both past, present, and future, well, then I have everything I need to run that formula and run a proper scenario for a sign-on bonus, let's say. But question for you, and maybe don't think just about you in this scenario. If you've gone through that vet and you can see that you can check all of the boxes, we can both agree that sometimes sign-on bonuses could be appropriate. Like
Sure.
it could be appropriate, right? But what I also heard you say was, now you said it about refis, but I think what you're saying is it's not just refis. If there's a point at which the formula breaks, the answer is no. It's not, let's start pulling levers relative to sign-on bonuses, transition comp, to then get me more comfortable with something in the vetting process that's showing me we are not a model match for each other.
Yeah. I mean, listen, I look at it like when I pre-approve a client, right, you got to check off, right, the traditional 4 C's, right? Credit, capital, collateral, capacity, right? If you don't have the capital and I turn a blind eye to it, we get to the closing table, we're not going to close, right? Just as quickly as it breaks down to sales, service, and support, right? You might be really good at one, but you tell me you understand the need that you really need help and support for your business, which in my opinion, the two things that I give directly to an originator is the service and the support. The originator's role is to do the sales. So if I can put systems in place from our growth strategy team, from our digital team, from our marketing team, from my sales managers to help you in the service and support, you should only be busy on the sales side. And you should have that confidence to pound your chest like a gorilla and be like, yep, we can close on time because my ops team is fucking awesome and I can submit a file immediately and it can get approved in less than 24 hours. Why? Because I say that. And why? Because I could see other loan officers within the team. Our process too, when we're going through it, like I want you to talk to my sales manager, my ops manager, my growth strategy manager, my business development manager while you're going through it. I don't want you to just talk to me because I'm looking at you as a dollar figure and you close $20 million in revenue. And if I paid you 150 basis points and I have another 125 basis points, that means that I could potentially make off of you $225,000 or whatever the math is, right? No, dude, talk to my sales manager, but it also helps me too. Because my sales manager might tell me that this person doesn't believe that they should complete qualification milestones when they're passing a deal to a processor. Okay. But it also, in my opinion, that stage allows you the opportunity to build a synergy with your clients, which tells me that you may need an LOA, which is okay.
Dude, right? It's more than that. It's more than that. Because you're by doing that, if it's a match, the originator on the other side wants to now be with this team more than they did before. That relates to value. That relates to the offer. Like it continues to track forward. Listen, companies should hire you and I to sit on stage and actually talk about this from point A to point B or Z. We're only talking right now for the sake of this conversation. We're really just talking about the end here. We're not talking about the process all going forward. But there's the value to that process is wildly enormous, because this is where we end up with a problem at the end of the formula where either an offer is made that's that doesn't create a return for the company or undervalues the opportunity that's in front of you. So let's play a scenario for a second. Who do I want to be the LO in this case? I guess I'll be the LO in this case. Let's pretend you do sign-on bonuses just for the sake of this argument. Mm-hmm. And I want to work with you, Abdel. You're my number one. You're where I want to go. and you give me the offer, and I come back to you and I say, hey, look, man, I want us to be together. I think we can both agree that we can be really successful together. Oh, by the way, let me back up. You also said something about the employer thinking, I'm going to get this done because I can make this much money off of you. By the way, everybody hiring originators or branches, that is what they're thinking early stage. They're thinking that they create more value for you than the other way around. And that's why you end up in this spot where you have to compete on offers and sign on bonuses. If they're convinced that it's equitable, then you change that scenario. Okay, so let me go back. You want me, dude. You full vet, you see the value, past, present, and future. I want to be with you. You make me an offer. I come back and I say, hey, man, I dig it. But this other company, they've offered me 20% more in the upfront, in the sign-on. And if you can just get me there, I'm with you. How do you handle that conversation?
Listen, Eric, I agree, and I'm a firm believer in you're certainly worth the time, you're certainly worth the energy, but I also don't want you to feel trapped. And let me explain to you what trapped is. Trapped is, are you looking for that gross number top of line, or we can maybe build in some potential metrics where we could build in that relevancy, where if we could weigh it and see your success, I'd be more than happy to actually increase your base comp. And then that way you're making more money in the long run. And also my job is to also win your trust just as much as your job is to win my trust. So it comes down to, us attributing each other's strengths, right? My strengths is to put you out there, branding, technology, information, as a producing branch manager myself, and also share with you and not just tell you, promise you. So TRAP, right? So top of line, relevancy, attribute my sex, and then show you the actual promises. And if I could do that, do you think that outweighs that extra $20,000 that you're being promised, or whatever you said earlier, from that other company? Well, and if they tell me no, then I know immediately it's a revenue conversation. And then, or if they do tell me yes, then I've earned the trust. Then we can go over. And you know what, by the way, dude, what I want to do is, instead of us putting you at 150, I'm actually going to do 160. We're not going to touch the margins, and we're going to keep that comp cliff there for us to continue to excel even further.
Okay. See, and I know you're actually going to do more than that, because Abdel's going to build a graphic and show me the physical math on paper so I can see top line to bottom line in partnership with you. All great. And these are things I generally don't see happening, because here's what happens. Somebody comes to you and says they want more. Usually the reaction is emotional, and now we're done. You might as well just forget. Now it's like, just give me the money or don't, because you're getting emotional. I can feel that now you're frustrated. So sometimes what happens a lot of times is that should also be an indicator for you that you didn't go full doc in your hiring. You didn't go full vetting. There's something within the formula that they're missing from a value perspective that's making them think that this little bit of money up front, that it's, I don't believe you, Abdel, so I need you to give me money so that I'm willing to take more risk, because I don't really understand the full formula. What I love about what you did, though, was that you removed emotion. You immediately said, hey, I understand why you feel like this, man. It's a tough market. It's really hard to kind of pull all of these pieces together. Let's go back. Let's remind each other why we're here in this position in the first place. And then let me share something with you in partnership. This is not a templated offer. In partnership, maybe there's some levers that we can pull. I'd love to see you make even more money. But what you're doing is you're telling me, use my model to go earn it. The other thing that you did, which is very old school, and for some reason we've gotten away from this, is that just eat your margin on the front end of this relationship to give me a chance to go earn the extra income without a clawback provision, without a promissory note that's now part of my compensation plan, where I do feel trapped, where now all of a sudden, if there's a day where I'm less competitive than I normally am or are, if my wife is listening, she'll kill my English. If there's a day where I'm less competitive, my first reaction isn't to think, oh, I know what you did, dude. I know what you did. Now that you gave me that little bit of money, you're stepping on the sheet to make up for it. And I'm having to pay for my own sign-on bonus, which, by the way, the money's got to come from somewhere. Sure. The money's got to come from somewhere. Okay, that's all really, really good stuff. The other thing that I'd like everybody to think about is you can't just assume somebody's wrong in this. If you're losing deals to a company that's doing sign-ons, you can't use that as an excuse. Because, by the way, and I'm not going to name names, but we all know companies that we'd be talking about here. Think about the one that comes to mind first. Don't say it, but think about the company that comes to mind first. I don't have a relationship with that CEO, but I know that CEO, and I've seen his body of evidence and his body of work. The math might be working. And by the way, one way it might be working, and by the way, again, I'm not suggesting this is what this company is doing, but they have a responsibility to their shareholders and to the company as a whole to grow the business. And if I pay you a sign-on bonus and you don't deliver for me anything other than a great experience, part of what I am going to do is try to capture your borrowers and your past production. So if you split on me at the 25th month and you're like, woohoo, I got my sign-on and I won the game. Well, hold on a second. Ask me in a year, because if that company now retained your borrowers and won your past business and all that work that you've done, who really won the game? Ask the TPO side of this business how this works. You know, wholesale account executives are wildly valuable. The good ones are. But the truth is, when a company does a broker scrub, what are they doing? They're looking to see, it's really, an account executive making a move is truly more like an acquisition. Yes, the AE has tremendous value, but they're acquiring access to the brokers. And if that AE doesn't do a good job in partnership with the company, the AE might have more at risk than the company. Okay, sorry for the tirade, but there's so much that there's such a rabbit hole we can go down with this one.
No, it's true. And I think, listen, for me, it's keeping on top of the conversation on the compensation and on the budget. I think I take it and I'm able to flip that recruiting like just conversation immediately, right? If I lead with, hey, you're going to get the gorilla machine behind you, pricing, branding, systems, biz dev, growth strategy, ops, speed, the fact that you don't have to get involved once a file is passed off to a processing team. If an LO lights up at that, wait, I don't have to chase after clients for bank statements if they're missing a page, or if a file hits the shit, I don't have to be the one figuring it out on my own. I have a sales manager that's going to step in who has a vested interest in me closing. If that doesn't like make a loan officer happy, then I got my answer, right? If they only light up when I say, hey, they wanted 20, well, here's 25, and they're happy, I got my full doc, like we talked about, for free, right? I didn't have to find out the hard way. Right. And I had it. One of our sales team leads now, he was coming onto the team. Obviously, just like anything, his company caught wind because he was looking to leave, and his company offered him 20 grand, literally. And he sent me a screenshot. And I'm like, think of it this way. It's like you get caught cheating on your girlfriend, and then you go and buy your girlfriend a ring. Like, I'm not
Don't say it. I know
right?
you're talking about.
You know where I was going with it. Yeah, God rest his soul. But he went and he did it. Right. He bought the ring, and then that just completely not tarnished his reputation, but that's not a bright moment in his life. That's how I look at it. Right. So I told him, I'm like, dude, that means that they're buying your worth now. First of all, I just gave you a little bit of a bump in comp, and we did the math as you literally just said. I put it in front of him, and I'm like, dude, that literally means that you only needed to close whatever the math was. I think it was like just a hair under 10 million. And you would have made way more money. Right. And also for me, there's 8 people in a transaction. So imagine how many people, because you closed 10 million, did you now spider web of the circle of cash flow, as Todd Duncan says. Now you have that much more of an opportunity. And guess who's going to help you go after those relationships and reciprocate those relationships? You're not unknown. You're not on an island. My team is there to also support you as an originator. So is it the $20,000 or the potential $200,000 that we're going to make by bringing in those relationships and revenue opportunities?
And like our last settling scores conversation, I don't know if it was the last one before, but you just threw it up on LinkedIn, which you're kind of going through your process of creating multiples and customers for life, essentially. Hey, LO, who's going through this scenario, what do you coach your borrowers on? You're coaching date the rate, marry the house. I mean, let me show you the wealth building opportunity over the course of time. It doesn't mean there's not going to be bumps in the road. It doesn't mean we're not going to increase our valuations by 15% every year. It's not going to work like that. You're coaching the long game, but you're not actually doing it yourself. And again, I came from the guy sitting in a cubicle, building these relationships, dialing for dollars, until I realized that's not what I'm doing. I'm building relationships that I actually enjoy supporting, and then seeing their growth and development over time. Not every change is perfect. Not every move is the right move. Sometimes you got to learn some difficult mistakes. But I do understand sometimes where, that 20 grand makes a big difference in my life. Like in a quarter or a year where my income is down, my expenses are up, my kids are going to college, my mom got sick and I needed to help her do some stuff. And then all of a sudden a company comes in and says, let me put my arm around you. We see the value of what you've built over the last 5 or 6 years, and we're just going to drop 150 grand into your bank account today. Well, I get to go home to my spouse and say, everything's fine. Now, I'm not saying everything's fine for now, because that's really what it means, but I get to breathe for a minute. That is what you are competing with. The only way to put yourself in a position to remove that emotion is through full vetting, full doc, patience, trust building, and not being afraid to say no when you see that there's a scenario that doesn't solve the problem. And both sides are responsible in this equation. More people should be looking at not only your company, but yourself. When changes have been made, what did the next 14 months look like? What did the next 24 months look like? So that when this comes up again, you either follow the path that worked because you proved concept, or you don't do the thing that didn't work the last time. Anyway, that's it, homie. Like this was a good one, and I love it because it's like this. It is where the future is, which is this hardcore balance of data, which has no emotion, and decisions, which have tons of emotion. And how do you pull the two together to ensure both sides end up with an equitable outcome? Okay, last thing. What are you doing this weekend? Any Memorial Day plans?
I was supposed to have about like 70 people over my house tomorrow. And, we decided to get a freaking monsoon now on the East Coast in Jersey.
Yeah, we've all had droughts for like months, and now all of a sudden it's raining nonstop.
It's brutal. So we moved it to Sunday, and right now it's a hit or miss with Sunday, right? So, but it's been cool because we got the pool heated now. So dude, like yesterday, I think it was yesterday or this morning, I put a post and like you could literally see the pool steaming.
Yeah, right. It's like I'm at the Khawatmi spa is what I'm doing.
But dude, I love it in the summertime too when it gets nice because the new office we opened is 60 seconds away from my house. We all just go there. So we work here till like 12:31. And then my entire team, my realtors, my partners are coming, and we're literally all working in my backyard, like taking calls. Somebody hangs up for like and we're telling them like, yo, dude, call them back and tell them like, all right, so they didn't go with you. Why didn't they go with you? What was your price? Was it a pricing issue? Was it a service issue? Was it your support? And ask them, I want your honest feedback so I can make sure I service my clients in the future. And they're like, it's fucking awesome. So it's cool.
Cool. Keep taking pictures and cutting videos of those, because that you want to talk about some great recruiting content. I want to be on that team. If my sons don't figure out the direction of their lives, I might just ship them up to you.
Let's go.
All right, brother. Have a good weekend.
Thanks, man. I'll talk to you soon.
Yep.
Cheers.